Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. It has been a very challenging day for the Australian dollar as the bulls continue to push on after this current 7-day trek and now gradually breaking over the 73.8085 resistance. We have got to a high of 74.13, but I feel the market is getting in a bit of a tight spot because we are extremely overbought over the last couple of days. And the fact is also that the ADX is starting to heat in terms of when it gets over 40, the trend is starting to heat up a bit and therefore could see a reversal anytime soon. With that being said though, the RBA kept its rates on hold for its September meeting as widely expected. And no doubt we could see further surprises along the track. But for now, the market will be looking for the GDP tomorrow's release. And then we've got the main event at the end of the week, which is the non-farm payrolls. And no doubt we could see a little bit more whipside price action for the US dollar as that now sinks to a fresh April 2018 low. For now, though, I'm keeping a very close watch on this market. And if we can see a close underneath the level of 73.65, that would give further indication to the downside. Now, as I said, the US dollar hit a fresh low around 2018 and the euro surged into the supply zone now, seen around 119 to 120. But this time around, the market seems to be holding up quite well since breaking above 119, unlike before. From the given fact that we are sustaining above 119, keep a very close watch on this MACD because if it breaks for the zero axis, it could marry up to the overbought RSI and see a little bit more squeeze to the upside and no doubt see a little bit of stop loss emerging and therefore could see a rally up to about 120.20 to 120.40. I don't have a strong view at these levels. I feel the market has overextended and also broken out of this shoulder, head and shoulder pattern here. So the right shoulder has been taken out. There's a little bit of a way before we see a reversal here. So unfortunately, I'm going to be neutral at these levels and wait for better opportunity. Looking at dollar yen, the market since rejecting 107 still remains focused on this level of 105. If we can close underneath 105.20, then we should see a further sail down towards the 104 region, which is where I believe the market will most probably end up, given that the RSI is still relatively negative under the fifth midway point. Along with that, also the MACD is underneath just of the zero axis, and once they marry up to or sync together, is that we should see further emphasis on the downside. As you can see, the market surges further for the pound, and if we look at the broader picture, it is heading towards the December 2019 highs around 135. It is viewed at present we are extremely overbought and therefore could warrant a pullback. But is it heading for a bull trap? Because I feel the market is just pushing a little bit too high along with these technicals. And anywhere between 135 and above could see the market get caught in a trap to the bull case and see a turnaround rather sharply. But at the moment, I'd rather sit out for the moment because the risk factor is still uncertain to the top side of the range. And would like a little bit more indication from these indicators, which I'm not getting as of yet. As you can see, we were in this channel back again since breaking above the level around 140 and now clinging to the top side of the range around 141.70.90. It is assessed that once we get a reversal in the pound, then this market should plummet, but not at the moment. It seems that it's quite happy continuing to press this top side since this long-legged doji break above 140. Let's see if the market can reject this level, and if so, could see a turnaround back towards its bottom side of the range around 140.50. We need to see a break under there to get the momentum going down. But we are overbought and the market is somewhat overheating. So you can see that all the markets, not just the sterling yen, but the sterling and also euro and Aussie, all the levels towards the RSI are extremely overbought and under pressure. There is a bit of an extension coming into the gold now. Since breaking above 1,972, the market is now looking towards a region of an extension to 2,000 to about 2015, and therefore could see this move up, with the RSI only supporting this, not the MACD. It still remains underneath the zero axis, but not too far away to fall in sync to push this market up. I have to reassess from 2015 because the next level could be up towards this 70-75. I don't have that call yet. I'm just monitoring how this price action is actually staging its recovery since 1,900 rejection. Still playing to the lackluster game for West Texas crude oil, and a little bit to go on the fact that there's a lot of furthermore there's more bearish candles than there are bullish. Nevertheless, I feel the market still potentially expect demand towards the bottom side around 41 or maybe down about 39. We do expect to see a little bit of whipsaw price action if we can get a break above $44 a barrel, as that would expose 46. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report and hope you enjoy the rest of the day.